Hey, Mike, is it possible that both of us are just variations on a ChatGPT hallucination of some kind? Like, are we actually two people? Can we do a Turing test on ourselves?
Yeah, one of us might not be the real one.
All right, let me ask you this. How do I panic methodically?
Break it down into little small steps and do one a day.
You want me to ask ChatGPT about that? Hey, it's Matt Robison along with Mike Morton, and this is, what are we on? 5-Minute Finance?
Yes.
By the time we're done listing all of the title iterations that we've gone through for the show, it will be actually 5 minutes. But this is the show where we do not bore you with generic financial information or long treatises on how to optimize your life, which you're never going to follow anyway, because you don't have the time. You are a busy, working, successful parent with too much to do, and we are going to make things as simple, practical, and straightforward as possible. Actually, Mike's going to do that, and I'm going to filibuster and bloviate.
Yeah, can you do that all again in one breath?
That was one breath.
I know.
You'd be shocked. You'd be shocked with me. We were lightly teasing there the idea of ChatGPT. That will come back later in our One Thing segment, as will the following listener question that I'm just going to tease. I'm just going to leave here in our listener question segment. The question was, what's the best way to do these things? I'll just leave that there and let it breathe. Mike, I think the main topic today that we wanted to get into is, what the hell, man? What do we do now? The world and the markets seem to be, exploding. This is stressful. And you want to address, okay, what do we do now?
Shock and chaos, brother.
Right.
It's crazy out there. What do we do now? Where do we go from here? What's going on? Where are we? And what do we do next? And all of that. So yeah, in fact, you just maybe think of something about that I've been explaining to people too, and I get to use my hands for this. So if you're watching the video, it's great. There's a lot of things going on in the political world and the economic world, and a lot of news and unknown and chaos going on over here. And then there's also the stock market and investing and your portfolio and all that kind of over here. Now, these things may or may not be kind of linked. You think like, oh, there's kind of some stuff going on here, like tariffs. That's kind of in the political, economic, and then it hits the stock market, and the stock market tanks. So there's a correlation or causation kind of between these two worlds. But you have experts trying to predict or say like, this is what's going on here. And so therefore, here's what's going to happen to the stock market. And they're wrong. In fact, they're wrong more than they're right. Okay. When they try, even in like gentle times, like sort of average normal times, they're totally wrong. So don't be confused with like, conflate the craziness going on over here and that it's going to directly kind of translate over here. And I think that's an important message that we need to, in the investing world, kind of take what the markets are giving us. They're going to go up and down, and there's certainly a lot of historical context for them going up and down, and take that and use that to our advantage, depending on if you're in retirement or you're working or where you are. Kind of take stock of the stock market and don't always be confused with like all that anxiety producing stuff that's going on over here.
So if you've got one core message, and we'll get into much more of a step-by-step for the remainder of the episode of really what to do when the world is blowing up around you, and especially the stock market's blowing up. But if we had to boil it down just right up front within the first 5 minutes, as we promised people we will do, it sounds like what you're saying is, yeah, there is definitely reason to be concerned. There's actually a lot of panic going on out there, but your response to it should be more planned, step by step, and actually kind of calm. And it just to jump ahead and preview a little bit, you're going to share a quote in here: panic methodically. Is that really your take home? In terms, the question is what to do now, and your answer is panic methodically.
Yeah, and that comes from a great writer, not from me, Jason Zweig of the Wall Street Journal. And he had a great article this past weekend that I pulled a couple things from for this episode. So definitely check that out. And he's like, if you're going to panic, panic methodically.
All right.
So take your time.
Yeah, we're going to get into exactly what that means and kind of what the step-by-step is. And we're going to do that right now. So let's just start off. Obviously, we're recording this about a week before it's going to drop. We don't know what's about to happen. We're like Crash Davis talking to the catcher. I don't know where the ball's going to go. And so we don't want to presume anything, but suffice it to say, there's been a tremendous amount of volatility going on in the market in recent weeks. This happens. So first of all, tell us where we are. Like what's been going on that's prompting this question from your clients?
Yeah, exactly. Well, obviously the question's on top of everybody's mind in the last couple of weeks. And like you said, by the time you hear this, who knows where we'll be. But it's volatile times. That's exactly in the news, and in the stock market. It's chaotic, kind of volatile times. And this is not unusual. It's just in the last, we're so recency biased. We talk about that on the show all the time, right? We just like whatever's happened in the last few weeks. That's like how it's going to be for the foreseeable future. And so we get used to this sort of like, oh, the stock market's just going up all fall. You get the Trump bump and like, it's going to be good for markets. And, it's just kind of chugging along. It was great for stocks. And then all of a sudden you get this, massive volatility. So it's on everybody's mind. But historically, we're right now about 15% down from the all-time highs of 6-8 weeks ago. And that is not unusual.
Really?
This happens every few years, say every 3 years. You'll be down. 10% happens every couple of years. 20% happens every 3 to 4 years historically. So we haven't even quite hit the 20%, that bear market. We came super close, and who knows what's coming next. But this is not to be unexpected. You should, in your investing world, in your portfolio of investments, you should expect this to happen. It happens all the time, every few years.
And it sounds like what you can't do is then make assumptions about what's going to happen next based on your intuition or your reading of the New York Times about like, well, the president's going to do this, therefore we're going to see that effect, because history tells us more often than not that leads to bad things happening.
And especially right now. I mean, right? Like, who knows what's gonna, be announced next, and then how the market and everybody's gonna react to that. We've had such massive ups and downs, which are a little unusual. Almost a 10% increase in a day is pretty historic. But again, like overall, where your portfolio is down 12, stocks are down 12 to 15%. That's like every other year, man. This is like to be expected. And so you have to be ready for that. And then, so your question, like what's happening next? Where are we going from here? Who knows? My crystal ball is still broken. It's not working. So I don't know what's going to happen next, but I fully expect there will be a lot more ups and downs from here, and that you need to be prepared, both mentally prepared and have your investment portfolio prepared for that.
How do you get yourself mentally prepared? And I'm gonna tip my hand a little bit here by saying I adopt an ostrich head in the sand strategy intentionally, where I just don't look. It's like The Simpsons. Just don't look. Just don't look. I really limit how much I look at my portfolio, because what am I expecting? It's the old buddy tape principle that I've reviewed on this show before. It's only worth doing things that are going to like actually change, your outcome. It's only worth learning things that are going to change your behavior. It's not going to change my behavior if I suddenly see what I already know is true, which is my portfolio's gone way down. Like, oh, okay, what am I going to do with that? So, how do you get mentally and financially in a position where you can withstand the volatility that's coming?
First, a couple of comments. Like, I love to do nothing. That's the best strategy. So we could just end the episode here. Like, hey, just do nothing. You'll be fine.
This
no
has
worries.
Been. Yeah, right.
But honestly, like, it's a really great strategy because you have a portfolio that you believe in. It's set up correctly for you, for where you are in life. You believe in it. So why would you change something? The other thing that you mentioned there, Matt, I find this all the time. People look at information that they're not going to change any behavior or make a change on. Why do people look at that information?
It does baffle me. It does. You know, and like, look, not to make a reference to something that like some listeners may remember, some may not. This comes from a story. My whole buddy tape principle comes from a story of my wife, who's a doctor, who came home one day and said, yeah, you know, how's your day, honey? And she's like, well, you know, I treated a patient who may have broken a toe. And I said, oh, so you x-rayed it? And she said, no. And I'm thinking to myself, oh no, you know, like, I don't want to like, you know, tell her how to do her job, but that seems obvious. And I cracked and I asked her, it's like, why wouldn't you do that? And she said, well, it's not going to change what I do. It's not going to change my treatment plan. I'm just going to buddy tape it to the toe next to it, whether it is fractured or not. I'm going to do the same thing. And that's where I'm like, oh, that's the buddy tape principle. Only get information if it's going to change what you do. So I think this leads actually.
I gotta comment on that.
Oh yeah.
First of all, I'm gonna start using the buddy tape. I'd forgotten that story and it's so good. Here's the context that I'm gonna use it in though. In the financial world, what do when we talk about portfolios? We get performance reports. Hey, in the last 1 year, 3 year, 5 years, here's what your portfolio has done looking backwards. And that's great. Okay, so that's information. Are you going to make a change based on the performance of your portfolio? Now, we know because on this show, we say, well, we always say historical, you know, past performance is no indication of future results, right? But we also know that that's literally true when it comes to actively managed or even passively managed, active versus passive. We know that passive managed has better results. So you are now actively managing. You are looking at past performance and saying, you know, the total international stock market has not done as well as the total US stock market. So therefore, I'm going to make a change. That's an active decision about making a change. So you're actively managing your portfolio, which we know from historical purposes is not a good idea.
Right. Well, and also it really brings to mind a principle from government, which is the Pentagon is always fighting the last war. Meaning you're making adjustments based on what happened last time. Does not help you for the next war. Now, I do think, though, this is a great lead in to that Jason Zweig quote. If you must panic, panic methodically. And I could foresee, I'm going to turn this into a question to you, but I could foresee versions of this where you say, well, I am actually able to get some new information here. So, for example, President Trump put in place a whole bunch of tariffs, and then he pulled back at the last minute. And the best reporting suggests that he did that because of a panic, the potential for a meltdown in the bond market. Yields on U.S. Treasuries were going up. There was a sense that the whole bond market might crack. And that is very, very bad for all kinds of reasons. And still, as we record this, yields on 10-year treasuries remain elevated. It is possible one could have a thesis where you say, you know, there's a lot of volatility, not just on the market side, but in kind of the real world underlying side where there's changing geopolitical relationships, trade relationships, and perceptions of how much U.S. treasuries are a safe harbor. So I'm not going to change my overall split between stocks and bonds, but maybe I'm going to diversify a little bit more, both on the stock and the bond side in terms of my portfolio, and consider more international diversification, because that might be a better hedge than the diversification that I have right now. That would be, in my mind, an example of new information inducing a change. Maybe there's a little bit of a panic going on out there, but you're going to turn it into something methodical. What do you make of that?
I liked most of the lead up, Matt, but I didn't like where you landed, which was, you know, oh, maybe I'll change my international, you know, because I think that international is going to be a little bit better, or I'll change my long bond versus short bond because, you know, I'm seeing what's happened with the interest rate in the long bonds. I do like the lead up though for two reasons. One, I like the new information, and especially around the emotional side. So you asked the question, how do you emotionally prepare? Well, this right now, this moment is a great way of taking stock. How have you reacted in the last few weeks? You put your head in the sand, which is great. And so now you have some new information. Yep. Maybe I've been through this before with COVID. I put my head in the sand. I did it again here. So I know I can withstand a whole bunch of volatility, and it's totally fine. So that's good information to know about yourself. Other people might be, panicking and checking, every day the market. So that's good information in terms of how you're going to react. And if the market goes down 20% from here, 40%, are you going to really panic and start selling, which would be bad? Okay. So that's new information about how you're reacting, and therefore what kind of risk tolerance that you actually have, not hypothetically. Now we're in the real world of like, oh, it has dropped in value. So how are you reacting? And that's really good information for your risk tolerance.
So, that actually sets up something you had put into your notes for this show, which is, this question of like, well, should you buy the dip, for example? Should you jump in and look for bargains, essentially? And you have this great question in here. Well, if you didn't already own a particular asset, would you buy it at this price? And I think that's in my mind, at least what hits me from that is, that's another example of there are pieces of new information you could get that would cause you to make a change. And probably, again, back to Zweig, a methodical change, not a panic change, not a, oh my gosh, it's time to sell off everything, just be in cash, convert everything to gold. You can make a small methodical change. So my example was, gosh, maybe I want to just make my diversification a little bit stronger and include more international. Another version of this might be, I am going to just look at what has cratered. And if I feel like I would buy some of these stocks at this price, if I do individual stock investing, I'm going to take the opportunity to jump in here with a little, again, not a wholesale change. Is that kind of what you had in mind with that?
Yeah, absolutely. I think, if you wanted to own some asset, I'll start where you ended, some stock I'm thinking about buying and now it's gone down in value. That's a better time to buy, right? So if you're convinced that that's a good thing to own, now is a better time for jumping in. Just make sure you have the right thesis there. And I do like reevaluating your portfolio. So we talked about risk tolerance. Now I know how I'm feeling with a drop in the market, and am I thinking about making changes? Am I logging into my brokerage and thinking about clicking some buttons? But also another great thing is to look at that diversification. A lot of people don't have international stock. So now might be a good time to revisit and say, oh yeah, I don't really have much international. I really need to have, 10 or 20%. All right. So let's get that. Or the bond question. Oh, a lot of my bonds are really long bonds, versus very short bonds. Let's get some good diversification. So it is a great time, given the volatility, it's a great time for you to revisit your portfolio's diversification and make sure it's what you want, because we're going to go through this another month from now, another 4 years from now, and you want to be better set up then to be like, oh yeah, you know what? I thought about all that. I did the diversification. So now I know I'm ready for that 20%, up or down.
All right. So I'm hearing, I know you had a third thing that one can do at a time like this. Let me just review back to you the first two that I think you've just gone over. One is the first thing you can do when the stuff hits the fan is just make sure that your overall portfolio matches your risk tolerance. Meaning, are you set up to be okay with mentally and fiscally, financially, the volatility and the risk that's coming your way? And that's a decision you can make in advance, because you know that these downturns are going to happen every 3 or 4 years. So you can make sure that you're in a position to do what I like to euphemistically call strategic putting my head in the sand. It's like you're positioned to do that if you've made the decision. And then the next thing you can do is panic methodically. That's number 2, is seek out information that could change your behavior and make methodical moves, not wholesale moves, not panic moves, methodical moves like what you outlined.
Yeah, and I'd also just put that in I would put that the methodical moves in a broader context, right? So we're not talking about, oh, I'm doing some methodical moves based on what's happened in the last few weeks. I'm doing some methodical moves knowing that this kind of volatility happens regularly, and I want to be better prepared next time.
Right. So it's the kind of thing where it's like, well, maybe I am not diversified enough.
Right.
Domestically versus internationally. Maybe I need to be ready and positioned and decide, hey, if some of the stocks that I like to individually invest in dip, I'm going to buy. That's a strategy that I'm going to have, and I'm going to know when I'm going to execute it. Let's give people your third thing that you can do at a moment like this.
Well, when the market goes down, you can make lemonade out of lemons. So if you have losses in your portfolio, if you bought something relatively recently and it's gone down by 10 or 20%, you can sell that and what we call realize the losses, which you already have internally realized.
What a euphemism. This is a nice way of saying you're getting kicked in the crotch.
Yeah, that's right.
Right.
But you actually have to make it happen, not just like, on paper. Yeah. So you have to actually hit the sell button, which makes it that much worse.
Yeah.
Lean in, lead into your losses. So you sell that and immediately rebuy something similar. It cannot be the exact same thing, but it can be somewhat similar. You don't want to be out of the market. Right? We had a day where the market was up 10%. I mean, those are the days you do not want to miss. So you can sell something at a loss, immediately rebuy something similar to that, and you get to take that loss on your tax return. So it saves you on taxes.
Let's get right to our listener question, which I think you sort of kind of answered here, which is, how do I do this?
So how do I actually do this? Yeah.
How do you actually do this? And it sounds like you've kind of given the answer. It's 3 steps.
Yeah, we have that, but let me kind of go over what would you actually do, right? So you take a look at your overall portfolio, your 401ks and IRAs and brokerage. You got to put them all into a pie chart, okay? And make sure you have the right diversification. So it's a good time to do that. Is it 5 minutes? It's 5-minute finance? Not exactly. It's probably going to be slightly longer than that. But just review and see where you are. It's also a great chance to rebalance. All right. Maybe you've been riding stocks for 5 years. They've really gone up in value. And even though they've come down, maybe you're still a little heavy. That's what you find out. So it's a very, very good exercise, and especially will build confidence for the future, for the next time that this happens. So that's one thing you can do. And then on the what we just said, the tax loss harvesting, it's called tax loss harvesting. You can look and see if you have in your brokerage account, not your 401ks or IRAs, but your taxable accounts, your brokerage. Look in there, see if there's things that have gone down in value. And if you find any, you could sell those and rebuy something similar.
All right. That is a great sum up. So there you go. We gave the 5-minute version and the 25-minute version. And that sets us up for our one thing question, which just so happens to tie in very nicely. I have a one thing to offer everyone today. This is the segment where we give you one thing to think about, and it's specially geared for our target demo here, which is busy people who have too much to do. You don't have to be a parent, but if you're a parent, by definition, you've got too much to do to actually, handle all the balls that are in the air. Okay, here's my one thing suggestion for everyone. You should use ChatGPT more. I know. The
I've never heard
robot
that before.
apocalypse is on its way, and I'm opening the door, rolling out the carpet, and saying, "Come on in. This is great. We welcome our robot overlords." I am really struck, though, with the many uses. If you've been kind of casually keeping an eye on, ChatGPT is a thing out there, but you haven't dabbled in it recently, I can tell you that it has improved significantly over the last year. It is becoming really, really useful. Does it still hallucinate? Yes. Does it give you weird, oddball answers? Yes. Should you always ask for the underlying citations? You should, and it will absolutely give them. But it is incredible the number of things that you can use. You can even ask ChatGPT, what are some little known things that you can do that are very useful to people? here are some of the ideas.
Wait, hold on a sec. So you can ask ChatGPT how it should best be used?
Right, for you. And like, here's the list. I just did this in the run up to this show. I asked it, I asked it a couple of fun things, but I said, here's my question. Can you please give me suggestions for the best ways to use ChatGPT that many people don't know about? I always say please because these are our robot overlords, and I want to be polite.
You want to be polite.
Right. for when they send Agent Smith after me. Okay.
That's right.
It can turn messy notes into polished content. So you got a bunch of notes, it'll turn them into an email or a newsletter or a summary or slides. It'll create a personalized learning plan. So like my daughter has to study for a math assessment. It will create a study plan. It'll create practice questions and quizzes for her. It'll act as a thought partner. Like if you want to debate on both sides of an issue, spot biases or mistakes in your arguments, you can automate tedious writing tasks. It can be your study buddy if you're doing test prep, which I kind of covered. It'll summarize complicated documents for you. It can be a shopping assistant. So it'll give you comparison tables if you're looking at hey, I'm thinking about different laptops. I'm looking at different home renovation materials. It'll be a creative collaborator. It'll co-write a screenplay for you.
Co-write a screenplay. There you go.
This is one that I think is particularly helpful for your clients. It will do life organizer decision coach stuff. So it'll sort your to-do list. It'll create a decision matrix if you have a difficult decision. It'll help draft a weekly or daily schedule. So you could say like, help me prioritize these 10 tasks based on impact and urgency. And here's a final one that goes right to our listeners here. It'll be a parenting partner, no threat to your actual life partner, or a kid-friendly assistant. So you can ask it to, and I did this. I literally did this. You can say, could you create coloring pages for my 4-year-old? And it said, what kind? I said, dinosaurs. And it came up with a really cute coloring page. Craft a bedtime story. Come up with a trivia game. A craft idea for a rainy day. Anyway.
Yeah, a long list. It's really touting its own horn by giving you such a long list. I'll tell you what I use ChatGPT, and it is shockingly good. Having a conversation. So like I'll start with something. Hey, I'm trying to explore this topic or I want to know more or try to summarize this. And it'll give you some stuff back. And I'm like, no, tell me more about like this. I mean, it's literally like an assistant and it's gotten really shockingly good at that. Now, here's what I just used it for recently, Matt. I asked it to come up with an audio podcast about what people should do given the recent market and political chaos that is happening. I think it did a surprisingly good job.
You joke. But knowing that this was our topic today, I did that. And I hate to break it to you, but what it came up with was really good. I mean, and by good, what I mean is it was really close to what you said. That's perfect. So this is the prompt I gave, just so we're transparent. With the stock market so volatile right now, and with Trump's tariffs affecting long-term economic prospects, should I change my investments to have more bonds or commodities, or follow any other investment strategy? First of all, it complimented me on asking a smart question. So yeah. There we go. And then it said, first, your strategy depends on key personal factors. What's your investment timeline? What's your risk tolerance? What's your need for liquidity? How diversified are you already? And if you're nodding along, it's because I just heard all these things from you, man. And then it gave a little summary of what's going on right now, like you just did. And then it said strategic moves you can consider. You could increase your bond allocation carefully, and it gave pros and cons and tips. You could add commodities exposure, pros and cons and tips. You could diversify internationally, cautiously. You could stay in equities, but shift within, your mix to more defensive sectors like utilities and healthcare and consumer staples. And you could hold more cash if you want some ability to buy the dips. Not bad.
There you go. Not bad.
All right. Happy ChatGPTing, everyone. And for the, I think, somewhat human, your homework, Mike, is to come up with a Turing test that I could apply to you to prove that you are not a robot. For the very flesh and blood, Mike Morton, I'm Matt Robison. We'll see you next time.
Thanks, Matt.
Thanks for joining us on Financial Life Planning. If you like what you heard, please subscribe to and rate the podcast on Apple iTunes or Spotify or wherever you get your podcasts. It makes a massive difference. If you have a comment or question, please email me, mike@mortonfa.com. Until next time, thanks for tuning in. This recording is for informational purposes only and should not be considered for investment advice. Opinions expressed are as of the date of recording. Such opinions are subject to change. I cannot guarantee the accuracy or completeness of the data presented here.